The industry of sovereign wealth funds marks a new record with $8 trillion in assets under management. To put this figure in context, the GDP of the United Kingdom, France, Canada, and Spain totals combined $8 trillion too. The league table of the 91 sovereign wealth funds analyzed in the report this year is still dominated by the largest 10, which represent 75% of the total industry assets. The fastest growing funds were the China Investment Corporation, the Public Investment Fund from Saudi Arabia, and Kuwait Investment Authority. In terms of investment destinations, the United States, China, India, United Kingdom, and Singapore is still leading the ranking, showing continuity, with slight corrections in the case of the United Kingdom and India, and an increased interest for China. In 2018, the United States and China represented more than 50% of investment deal volume. By sector, technology tops the ranking in a record year for sovereign wealth funds participating in venture capital investment rounds. Technology is followed by finance, real estate, biotech, and consumer. Within venture capital deals joined by sovereign wealth funds, biotech and healthcare have dominated in the last 5 years. Yet, there is a growing interest among sovereign wealth funds to invest in startups leading transformation and change in sectors such as fintech, mobility services, including transportation, and agri-tech for new forms of solving agricultural problems. We analyze the correlation between funds maturity and its asset allocation. We also research on co-investment trends. Related to this strategic asset allocation, we identify how the traditional asset mix of fixed income and public equities is slowly being displaced by sovereign wealth funds investing in more illiquid assets. Factors that explain sovereign wealth funds' strategic asset allocation strategies include sources of wealth, macroeconomic purpose, liabilities, risk tolerance, and return objectives. Sovereign wealth funds look to ensure that the strategic asset allocation is aligned with the fund mandate and with any potential new rebalancing. Beyond growing their assets, a sovereign wealth fund is keen to show that they are also profitable, sustainable investors, and with a stable and robust investment profile. This year, as we said, we analyzed also the co-investment activity of sovereign wealth funds over the last decade. GIC, the Singaporean active investor, China Investment Corporation, and Qatar Investment Authority are again among these leaders of this particular group of most active co-investors. Showing the complexities of partnering and co-investing, only 22 sovereign wealth funds out of the list of 91 active sovereigns have engaged in some sort of co-investment activity. Finance, real estate, infrastructure are the top preferred sectors for sovereign wealth funds engaging in co-investing, representing 70% of deals executed over the last 10 years. Two last conclusions can be obtained out of the research of co-investments. First, sovereign wealth funds seem to be comfortable co-investing with other sovereign wealth fund peers. Here, the most interesting case is the Russian Direct Investment Fund. And beyond sovereigns, other frequent partners, the friends of sovereign wealth funds, include regionally focused asset managers, insurance groups, sovereign pension funds, their cousins, and global asset alternative managers.